Have you ever wondered if that little bit of cash in hand work, or maybe a generous gift to your kids, actually goes unnoticed? Well, you might want to think again. In the UK's tax world, things have changed. HMRC is now using some seriously powerful artificial intelligence to look at our finances like never before. Today, we're going to pull back the curtain and show you exactly how it works. And this whole discussion, it comes straight from the experts at My Tax Accountant. So let's get
Right, let's kick things off with a number that should really grab your attention. £4.6 billion. No, that's not a typo. That's the extra tax HMRC's AI system managed to recover from investigations in just a single tax year. You see, this isn't just some random statistic. It's a massive flashing sign from the tax office. The game has well and truly changed. The days of the undeclared side hustle or a small mistake slipping through the cracks, they're pretty much over. Like I said, this insight comes directly from the team at My Tax Accountant. These are the people on the front lines, dealing with the real-world impact of these systems every single day. They're seeing firsthand how this tech is catching people out. So let's dive into the big question they wanted us to tackle. How on earth are these seemingly private financial moves being brought into the light? Let's break it down. To really get our heads around this, we first have to accept a pretty tough modern truth. The whole idea of private money is, well, it's quickly becoming a bit of a myth. Every single one of us is leaving a digital shadow with every transaction we make. And believe me, HMRC has become an absolute master at bringing that shadow out into the open. Remember the old days of paper trails and dusty filing cabinets? They're long gone. Back then, an investigation really depended on finding physical records, which could be lost, damaged, or just incomplete. Today, it's a completely different ballgame. Every single sale on eBay, every Airbnb booking, every proud post on social media about a new car, even just swiping your credit card, it all creates a permanent, searchable digital footprint. And this isn't just temporary data. It's a detailed, unerasable history of your entire financial life. So how in the world does HMRC sort through this absolute mountain of data? Well, they've got a not-so-secret weapon. A digital detective that never sleeps, constantly sniffing out things that don't quite add up. It's called Connect, and it is the super powerful engine driving their entire operation. Just look at that number for a second. 55 billion. That's not just data. It's 55 billion potential clues about the financial lives of every taxpayer in the UK. Think of Connect as a massive, sophisticated digital spider web. It pulls in threads of information from every corner of your life with one main goal: to find the one thing that looks out of place, the gap between the income you say you have and the lifestyle you actually live. So where is all this information coming from? Honestly, it's coming from just about everywhere. Connect is pulling data from your UK bank accounts. And yes, thanks to international agreements, your overseas accounts too. It sees every property you buy or sell through the land registry. It's analyzing your spending patterns on credit and debit cards. It's scraping data from online marketplaces like eBay and rental platforms like Airbnb. It even checks DVLA records when you buy a car. But stay with me, because this next part is where most people get caught out. It's also scanning your public social media. Every post, every photo becomes raw data that can be cross-referenced with your council tax records and, of course, with your own tax returns to build a frighteningly complete picture of you. All right, so we know what Connect does, but how does it actually work in the real world? This is where the theory becomes a very, very real problem for some people. Let's walk through two incredibly common scenarios that could honestly apply to almost anyone, showing how just a few digital breadcrumbs can lead HMRC straight to your front door. So let's meet our first example, a freelance web developer living in London. She's brilliant at her job, but she's also doing a few cash-in-hand projects on the side that, she isn't declaring, just to save a bit on tax. Because of this, her official tax return shows a pretty modest income. Her digital footprint, on the other hand, is telling a completely different story. Now, this isn't some secret government plot. HMRC has been very open about this. They have said they are using AI to proactively hunt for these so-called lifestyle inconsistencies. They aren't just sitting back and waiting for a tip-off. Their systems are actively looking for these mismatches 24/7. So, one afternoon, our freelancer posts a picture of her shiny new car on Instagram. The Connect system sees it. It instantly compares that high-value purchase against her declared income, and bam, it flags a major discrepancy. Now, the AI doesn't make the final call, but it shoots an alert straight to a human investigator at HMRC. And just like that, with a single social media post, a formal investigation can begin. It really is that simple. Okay, let's move on to our second scenario. This one covers one of the biggest and, frankly, most dangerous areas of confusion for UK taxpayers: cash gifts. You might think that giving money or an asset to your family is a totally private matter, but in the eyes of HMRC, it's anything but. First off, let's be absolutely crystal clear on what HMRC calls a gift. It's not just about handing over a bundle of cash. It's any asset you transfer for less than its full market value. The example on the slide is perfect. If you sell your child a house that's worth £500,000 for just £300,000, that $200,000 difference is considered a taxable gift by the taxman. And here's exactly why this matters so much. For inheritance tax purposes, a large gift is only fully tax-free if you live for a full 7 years after you make it. If you pass away within that 7-year window, the value of that gift gets pulled back into your estate for tax calculations. Now, the amount of tax due on it does gradually reduce between years 3 and 7. That's a system called taper relief. And how does HMRC know? You guessed it. Connect sees that large bank transfer or the property sale at the land registry, and it logs it permanently. If you were to pass away 5 years later, an alert is automatically triggered. There is just no getting around it. So we've established that getting flagged by the system is easier than ever. But what actually happens when you are? This, right here, is where things get truly serious. An HMRC investigation isn't just about paying back the tax you owe. For many people, it becomes a complete financial and emotional nightmare. Let's talk penalties. If HMRC decides you have deliberately hidden income or intentionally tried to mislead them, the financial hit is brutal. We are not talking about a little slap on the wrist here. You could be staring down a penalty of up to 200% of the tax you originally owed. And that's on top of paying the original bill plus interest. For a lot of people, that's a financially crippling outcome. It's enough to wipe you out completely. And here's a quick pro tip that should really make you think. Most people assume HMRC can only look back a few years. That's wrong. For cases they believe involve deliberate evasion, they have the power to go back 20 years. That's right. They can demand records and ask for explanations for financial decisions you made 2 decades ago. When it comes to your taxes, the past is never truly in the past. But it isn't just about the money. The human cost can be absolutely devastating. This quote is from a real case study, and it really says it all. An HMRC investigation is a long, invasive process that can feel like it's taking over your life. The stress, the sleepless nights, the constant worry, it's a heavy, heavy price to pay, even if you are eventually cleared of any wrongdoing. Okay, so that was the heavy stuff, but here's the good news. You can avoid all of this. Protecting yourself isn't about being a tax genius or finding some clever loophole. It's simply about being diligent, being smart, and being honest. So let's look at how you can take back control and protect yourself. Here are 5 really straightforward steps to stay out of trouble. Number 1, declare everything. Every single bit of income, no matter how small or how infrequent it seems. 2, really understand the rules around gifts, especially that 7-year inheritance tax rule. 3, keep good records. Meticulous paperwork is your absolute best defense. 4, if you're not sure about something, don't guess. Guessing on a tax return can be seen as negligence. And finally, number 5, and this is the most important one, get professional advice. So what's the bottom line in all of this? It's simple, really. Your digital life is an open book, and HMRC's AI is reading every single page. In this new world, making sure your tax return is a complete and honest reflection of your finances isn't just about following the law anymore. It's about being able to sleep soundly at night. So, I'll leave you with this one crucial question. Looking ahead to the 2025/26 tax year and beyond, are you absolutely 100% certain your finances could survive a 55 billion point digital inspection? If there is even the slightest bit of doubt in your mind, that's a sign that it might be time to act. Now, before we finish up, a quick and very important disclaimer. This presentation is for general informational purposes only, and it is not a substitute for professional, tailored advice. For any decisions about your own finances, you absolutely must speak to an expert who understands your unique situation. If that last question made you feel even a little bit uneasy, please don't just ignore that feeling. The team at My Tax Accountant are specialists in navigating these incredibly complex issues. They can help you get your affairs in order and give you the genuine peace of mind you deserve.
You can give them a call on 0208-570-8531, or you can send an email to info@mytaxaccountant.co.uk. Thanks for joining me.